Hi guys, this is Stanley from Value Invest Asia. I just want to thank you guys for replying our email on our survey form, and it really helps us to understand a little bit more about you guys and what kind of topics that you're interested in, and also what market you're interested in. We're definitely going to put that and incorporate that into our 2018 Grand Webinar. But before that, today I just want to share with you a short session on our 5 golden rules to investing. This is because from the question that we are getting back from our survey, a lot of them is surrounding how can we position our portfolio if there's a crash. How can we make sure that we are able to have a solid portfolio for the long term, and also how do we know when we should sell a stock or which stock to buy. So all these kinds of links back to my personal 5 golden rules on how I see my portfolio. So I'm definitely excited to share with you and see what you think about them, right? As you know, we're going to launch our 2018 Grand Webinar soon, I think within the next few weeks. And it also includes our Watch List 2018, which is our top 10 Asian stocks that you should be watching this year, right? But instead of just sending you a report like last year, we really want to get to know you and understand some of your feedbacks and question about our watch list stocks. So we want to do it in a webinar form. It's going to be a 2-day webinar. And what's most important is you're going to be able to meet all like-minded value investors around Asia that you can share ideas with, bounce ideas off, and challenge each other ideas. This is extremely personal to me because when I started out investing, I was an engineer and I wasn't in the investing line, so I do not have many friends who invest, and it is really a very lonely process. And it is only until that I met my co-founders of valueinvestasia.com that I really been able to grow as an investor. It really brings my investing to a next level because I have someone to talk to challenge my idea with, and I challenge their ideas, and really help me grow as an investor. I'm extremely, I believe in the power of community, and I hope that I can build such a community for you guys as well. So actually, some of you might not be familiar with me. Just a quick introduction. My name is Stanley, and I'm basically the co-founder of valueinvestasia.com, and I'm a co-writer of an investment book, Value Investing in Asia. And some of you have already been reading it. I thank you for getting our book. And I personally have been investing in the market for roughly about a decade, and I've worked in the finance industry for many years. I also speak for some of the brokerage in Malaysia and Singapore in the region, and also the exchanges as well. Interestingly, we only started valueinvestasia.com officially about 8 months ago, and it has really have gotten a huge response. And I just want to thank you for being our readers and giving us feedback on and off on what are the things that you're interested in. Today we have more than 30 to 40,000 visitors every month reading our site, and thousands of you have already signed up and read our monthly Asian in Focus report, which we give out every month. And if you have been following us, we have also done a review on our watch list 2017 last month, and you'll be able to see that of the 10 stocks that we are talking about, 9 of them actually saw a positive return in 2017, and they almost average about 33 to 34% on average. And it was really a great year for the stock market last year, and we're really excited. I think 2018 is going to be more interesting. It's going to be more volatile, and it's definitely something that we should all stick together and watch, right? Okay, without any delay, let's go into my 5 golden rules to investing. So basically, how I come about the 5 golden rules is through a long period of trial and error. I have been investing in the stock market since 2006, and at the beginning few years, it was really I have to say I do not know what I'm doing. So I try many types of style. I read many investment books and I just experiment with each and different ones. And finally, I think after a few years, I'm able to form these 5 golden rules that now most of my portfolio, most of my stocks are adhere to, and it gives me a guide on how I should position my portfolio, right? So my rule number 1 is I always focus on the fundamentals. When I say fundamentals, is the fundamentals of the business. Let's not look at any price chart and not get carried away just because the stock has been climbing, or just because the stock had been hammered and then you feel that you can buy it and wait for the rebound, right? Always start from the basic. Is this a great business? That's what I always look at. And after reading hundreds and thousands of annual reports and looking at companies, I realized that there's basically only 3 types of value we can extract from the stock market, from stocks, right? And the 3 types of asset value that we can get out of from them is asset value, current earning power value, and also growth value, right? So any 3 stocks that I feel that there is any potential of for us to get rewarded from, basically only have these 3 types of value in it, right? And we want to start by looking at them from a business standpoint. Does this business have a good fundamentals, and is this something that I want to own for the next few years? And I don't mind if I'm just running a business privately, is this a type of business that I want to go into, right? All this question allows you to take a step back from the stock market and really understand the business at its core, right? And number 2, I think, is very maybe contradicting to a value investor, but a lot of us has a misconception that when we are a value investor, we have to adhere to valuation and be very strict with it and have a wide margin of safety when we invest in a stock. But I want to say that valuation is actually just a guide, right? That's because valuation is still done by a researcher, is still done by an investor. So it's still gonna be just an opinion of one person, right? Regardless of you are using things like price to book or price to earnings ratio, right? All this, at the end of the day, is really just a guide, and we should not fall into the trap of chasing after valuation. Just because the stock is cheap doesn't mean that we should buy it, and just because the stock is expensive doesn't mean we should not invest in it as well, right? A great example is I actually invested in the stocks called MyEG Service Berhad back in 2011, I think. And this stock, I feel that this stock has a great business model. It's basically a virtual post office. Is able to go to different government departments in Malaysia and say, hey, I'm going to help you digitalize all your process. And instead of people going to the government office to maybe renew their license, you can do it online, right? And they just charge a simple service fee. The business is great, and but at that time, I was a very, very strict value investor, and I just valued the stock at a certain price. I think it was 80 cents, and it was trading about 30 cents. So I bought them, and when they reached roughly around 80 cents, I sold them off, right? But the problem is, it's still a great business, and it's still growing constantly, and it's still just at the beginning of its growth, right? And actually today, if I just bought and held onto the stock and not worry so much about the valuation, the stock has actually went up more than 14 times my cost, right? So this example really taught me that sometimes especially when we found a great business, the greater the business is, the less relevant the valuation of the company really is, because the company can grow over time. But if you're looking at a company that is not that great and not that well managed, and maybe they doesn't have a good growth prospect, and at that time, if you want to invest in such a company, then valuation is very important. You want to be able to make sure that you're getting a bargain. But if on the other hand, if the company is a great company that you can just grow for a long term, sometimes valuation is not that important. It's just a guide. And rule number 3 is one of my favorite, is actually cheap rubbish is still rubbish. And this is also from a personal experience. I bought into a stock called Arata Lifestyle. This is what we call a S-chip, right, in Singapore. And at that time, I thought that, hey, you know, S-chip has a bad rap, and I think that was 2012 or 2011, right? And I feel that maybe not all of them are questionable. Maybe some of them are real companies with good prospect. And I found this company, Arata Lifestyle, trading at 1x PE. So on the valuation matrix, is extremely cheap, right? And it's giving a dividend about 3-4%. And so I thought, wow, this a bargain of a lifetime, right? And I bought into it, and sure enough, after I think just about 4 or 5 months, the company came out and was exposed as a fraud, right? So these are the type of experience that make me realize that why should I be hunting for penny stocks and companies that has no track record and has questionable management, when there's tons of other great companies in the stock market, right? If you're an investor today, right, we can invest in anywhere in the world, right? And it means that we have more than tens of thousands of stocks to choose from. Why should we go to spend the time to invest in a company that is questionable and that we are not comfortable fully in, right? Why should we buy cheap rubbish, right? And that is really how I form my third golden rule: cheap rubbish is still rubbish. I'd rather buy a gem. And rule number 4 is investing for the long term. This is very easier said than done, but investing for the long term, you can really be able to see the power of compounding. When we're starting to invest, we get very excited to want to invest in the next stock that is rallying, or jump into stocks that all our friends are buying. But we forget that investing is actually a long-term game, right? We invest for retirement, we invest for our kids' education, we invest just to save, and that's gonna be decades away, right? Even if you are at age 60 today, you can still invest for the next 20 years. And so we should really see our investment in this light, rather than just focusing on how this stock is gonna do the next month. Why not focus on how this stock is gonna do in the next decade? And it can shift your perspective a lot, and you are gonna be able to find great companies that you are gonna see that's just compounding their earnings over and over and over again. I just gave you an example. Of course, when we think about great companies, we think of the great companies from the West, like Microsoft, Google, Amazon, where all these companies, if you have bought them at the beginning, right, it's gonna be a huge multi-bagger for you. Some of them even more than 100 times, right? But in fact, even in Asia, you are able to find such stocks as well. I just give you a short example. Even in Malaysian market, right? If you have just invested in any of all these 4 stocks in 1992, right, almost right before the Asian financial crisis, when you just invested 15,000 ringgit in them, today you're gonna get back more than 500,000 from, say, Nestle Malaysia, or maybe 300 to 400,000 from Carlsberg or Heineken. And in fact, if you have invested just 15,000 ringgit in Dutch Lady in 1992, today your Dutch Lady is going to be worth more than $2 million. So in fact, great companies still exist in Asia as well, in every market, and great companies are long-term growth compounder. And this is something that we really forget. and I just want to let you guys know. And even in Singapore, that's the case as well. Like Raffles Medical or CWT Genting Singapore, all this company, if you just invested 15,000 ringgit in them, 15,000 Sing dollar in them, today there's more than 200, 300,000 of your portfolio. So now we're back to the last rule, golden rule number 5, which is know yourself. This really means that we come across many stocks ideas every day. In fact, a lot of our readers like yourself, you're very kind to share ideas with me, to ask me some of the stocks and what I think of them. It's really great, and it gives us a huge influx of new ideas every day. But we have to know what kind of investor we really are. Some stocks are appropriate for, say, your friends, but they might not be appropriate for you. And similarly, some stocks that you will want to buy, and they are not really suitable for your friends. And you really have to understand what kind of investor you are. Can you take more volatility? Are you an income investor that you really want to see dividend every year to make you feel safe? Or are you a growth investor that you don't mind betting on a money losing company at this moment, and you feel that as long as they have a huge potential, you can be comfortably investing in them? So once you know what kind of investor you really are, then you're able to create that portfolio that suits you perfectly. Our motto is you are your best fund manager, and we really believe in that motto. And it is something that we try to practice ourselves. And rule number 5, know yourself, is extremely important. Alright, so that's our 5 golden rules to investing, and we just want to link back to one watch list stock that we're going to discuss to you in the next few days, Tencent Holding, right? Tencent Holding is actually now the largest technology company in China, and it's one of our watch list stocks. And I want to explain to you guys in our next video that why it suits our 5 golden rules and why we really like Tencent Holding, right? So watch out for our video number 2 that's going to come out in the next 2 days, and we're going to talk about our research that we have done on Tencent Holding. Right, before we go, we just want to answer some of the questions we have been getting from our survey, right? And we feel that we have gotten hundreds of questions from you guys. I really thank you guys for your response. We just want to pick some of the more commonly asked questions that we want to answer it today. Like number 1, so what is our outlook for 2018? Right, basically, if you have read our Asian in Focus report in December, we talk a little bit about what our outlooks for 2018. We feel that 2017 has really been a great year for investors. It is really a high market, right? And it's really hard to lose money in 2017, and almost all the major exchanges have seen positive return, right? That in itself give us a little bit hesitant. It makes me a little bit hesitant. Although I don't feel that valuation is in the crazy zone that everyone is rushing to buy stocks now, but I'm getting more cautious now. I'm getting more cautious now, and in a way, I'm gonna position my portfolio to more high quality companies that I know that can weather the storm, if a storm is coming, and they can continue to grow even after that, right? And having said that, I'm still very optimistic about some areas. Like I'm still very optimistic about China in the long term. I think the economy is going to do well, especially a lot of businesses in China is going to become prominent global players. And then one place that I'm seeing it is actually in the tech space. I think tech space in China is developing extremely fast, and in many ways it actually leading the way for the world, right? We are starting to see that company like Facebook is starting to copy a lot of features that we can find in Tencent's WeChat and other social media or technology that we can find in China. And So that is one big area that I'm very optimistic for the long term, right? In Malaysia and in Singapore, there's also some pockets of optimism that we should be happy about. Malaysia, I'm seeing more and more companies starting to go global, which is a good thing, given that Malaysian market is relatively small in the global scheme of things, and Malaysia exporters or just companies that are starting to expand overseas, I'm really optimistic about them, and some of them has actually been doing very well. Singapore has predominantly been a yield market, and so they actually have some of the best high yield, great quality stocks around Southeast Asia, and one area is actually the Singapore REIT, right? When you look at the Singapore REIT, you are still able to get distribution yield close to 6 or 7% with very high quality assets. If you just compare them to, say, the REITs in Hong Kong or the REITs in Malaysia, there's almost no way that you can get such a yield with that kind of high quality asset from those markets. So Singapore REIT market is one that I'm very optimistic about. Another good question that we have been getting is, how do we know when to sell, right? If you think back to my golden rules, we invest for the long term, right? So in fact, we shouldn't really be thinking about selling. When you want to sell, most of the time you can think of it as, I need the money now, right? When you need the money, then we think about selling. Or if you're talking about a particular stock, I personally only sell when I realize that my thesis for that company no longer holds true. Say if I invest in a company that I believe that it can grow to become the dominant company in the industry, and then we see that that's not really happening after a few years, and there's some company that I might sell, or I might buy into an oil and gas company, thinking that oil price will stay high for the long term, and then alas, oil price collapse and my thesis don't really hold true anymore. So it goes back to, when you are investing, when you are finding a company to invest, always form a thesis on why you're investing in this company. Write it down somewhere or record it, right? And so you can go back and when you review your stocks again, you can see, does my original thesis still holds true? If it doesn't, maybe you should think about selling that stock. Right, so that's really wrap up our webinar for today. I hope you enjoy it. Do know that we are trying to build a community here. That's because as a value investor, there's so many companies to research, and it's almost impossible for one person to finish the job. And so we want to build a strong community around Asia, and people can be able to harness the power of community to share ideas together and to learn with one another. And that's really what we want to create with Value Invest Asia. So I'm really happy to be able to share this short session with you. I hope you enjoy it. If you have any additional question that you want to ask about for the 5 golden rules, or any other question about investing, do just comment down below. I'm gonna read to all your questions. I'm gonna write it down, and we'll try to answer them in our next video, which is gonna happen in the next 2 days. So watch out in your email for our video number 2, where we're gonna talk about Tencent's holding. Cheers, guys.